In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement, the weekly show that keeps you in the know about all things retirement. I'm your host and financial advisor with Market Advisory Group, Rick Everett, along with a full complement of panelists to include founding partner and financial advisor Danny Goolsby. From Market Tax Services, our lead CPA, Joshua Cicora. Healthcare insurance professional with Market Medicare Advisors Mark Benefiel. And our lead attorney with our estate planning team, Gerald Eidelman with Eidelman Law Firm. Welcome in, everyone. Danny, today you're going to talk and use each segment today to talk about different circumstances, but they all have the same theme. So what is that theme?
So, yeah, Rick, today I want to talk about the topic would be fractured retirement and how you have the different things that can fracture your retirement going forward. So generally, when we start talking with life is going forward in time, you're going forward in your work life. You've been accumulating money in your retirement plan. You've been setting aside money. You've been making plans to separate when you separate from your employer. And what does the rest of your life look like? Where are you going to spend it? Are you going to be doing travel? Are you going to be spending time with the grandkids? Are you going to be doing a particular charity work? What are you going to be doing in retirement? And then all of a sudden there is a fracture, and a fracture could be many different things. And so I want to start talking about how your retirement plan could be actually turned on its head right before you separate from your employment. And so let's start with the topic of divorce. Divorce would be a big topic when it comes to fracturing your retirement. So you may be married for 10 or 20 or 30 years. You're in a good routine. Things are going about predictable. You're working, you're playing, you're doing the things that are important to you in your life. You're living your life a certain way. You may be having a good job, having a good, reliable paycheck. You may be putting money away for retirement. You may be having, just throwing money into a savings account. You're doing your budget. You're taking a vacation or two or a year. You're spending time with your family. Again, you're doing what's important to you. You and your spouse are living together and enjoying every aspect of life together. You're looking forward to growing old together, experiencing life's experiences together. You're looking at a lens through together. Again, you have a life's partner. As I said, things look very similar, and you feel like you know where you're headed, and then life fractures, and there's a divorce. Now everything that once was certain and predictable is now very much uncertain. What does that do for you? Where does life? Where do you go from there? How do you live? Where do you live? Before, just a moment ago, I knew exactly what life looked like. Now that I'm divorced or going through a divorce, now where will I live? How will I live? Everything was predictable. I knew where life was going, and now so much is unpredictable. Where's my assets going to be? How many assets am I going to have? Where's my income going to come from?
Joshua Cicora with Market Tax Services. The tax impact of someone who was married and now finds themselves single.
Yeah, so people often talk about divorce being expensive, and in taxes, it's really no different. There's no phasing from being married to being divorced. It's not like, oh, you've been married for 10 years, so you can step down to being single for your taxes. All that matters is your marital status December 31st. So if it doesn't matter when that divorce was finalized, whether it's middle of March, middle of August, or December 30th, December 31st, if you're not married, then you file single returns. And this can really be a problem based on how you have conducted your year thus far. So like Danny was saying, if you're working, you're getting that paycheck, you have your withholding set as if you're married. When you go to then at the end of the year, you become single because of that divorce, you're now filing your taxes as a single person instead of having the joint status, and all your withholdings though are done as being married. So there's a real disconnect there, and you're gonna find yourself having a very expensive tax return because Uncle Sam's not going to really give you much grace there or adjustment period. He's just going to say, yep, you were single, too bad you filed, or too bad you were withholding at those lower joint rates. The tax bill's now due. And now you have to deal with how all these assets have been transitioned if you're retired at this point. Are you going to have to accelerate how much income you're taking out? Because your tax brackets are going down, so they're going to be a lot more expensive going forward. And it's important then when that comes into the realm, maybe not before it's finalized, but while you have time to plan, do you need to be making adjustments? We'll sit down with people who are working with Danny or the other financial advisors. We'll talk about their withholding situation. We'll talk about if we need to make adjustments, do we need to make intentional payments? So this way, when it comes tax return time, there's no surprises.
So you could be married right up until December 31st, but if that divorce is finalized on December 31st, you're single for the entire year?
That's right. There's really no phasing or grace period, or people will ask, well, do I do half my year this way and half my year that way? No, there is no phasing or exceptions or grace periods or anything like that. December 31st, whatever you are, is what you're deemed to be all year long.
So what happens to the standard deduction in that case?
Half. You get half as a single filer as what you would have gotten as a joint filer. So then, and the same thing happens to your tax brackets too. If a joint person gets $20,000 in the first, the 10% bracket, the single filer is only getting 10 there. And so things will get very expensive very quickly.
Thank you, Joshua.
Yeah.
Let's transition to estate planning with Gerald Eidelman Law Firm. What does someone need to address legally when they get divorced?
Well, there are several things that come into play. All of a sudden, you had a life together and you had plans of each one supporting each other. For you have powers of attorney, for example, where each other are going to be there for the spouse that is in trouble. And the power of attorney that you granted your ex-spouse is no longer valid in a sense, but you still have to find somebody else to be that proxy for you. There's also the question about separating assets. Assets get complicated. Sometimes they're clear who they belong to, sometimes they're commingled, and then of course you have the courts that determine how those assets are to be split. One of the biggest things that people don't think about is who is the beneficiary of their retirement accounts, their life insurance. People don't realize if they have their ex-spouse on their retirement account or their insurance and they die before changing it, guess who's getting all of that? The ex-spouse. The law is extremely clear on that. So these are things that you want to be doing right away as soon as you can after the court gives you permission to begin making changes.
And I'm sure it's not an easy process as far as unwinding plans that have been made for an entire life and then trying to get everything rerouted.
Indeed, yes.
When you lose your life partner, a lot of your planning for retirement goes right out the window. Sometimes you need to find a financial advisor of your own, or your estate plans change and your taxes definitely change. It can help to only have to drive to one place for all of these needs rather than drive all across town. And at Market Advisory Group, that's exactly what we do. We're a place that does it all under one roof. And if you'd like to set up a complimentary, no obligation visit with our full team, operators are standing by right now to take your call at 316-252-8707. And be sure and check out our website at ionretirement.com. Now, in the next segment, we'll look at another retirement fracture that can change your plans. And that comes your way right after this.
Out on the water, there is a moment. Perfect synchronization. The team working together in harmony to reach their goal. Now, imagine finding a team of financial professionals to help run your course down the river of retirement. Market Advisory Group is that team. Financial advisors, tax professionals, estate planning attorneys, and Medicare Advisors. All in the same boat. If you don't have a team like this in one place, it can become a hassle to relay information between them. When you come to Market Advisory Group, we bring everyone together for you to get you answers in real time, to help make sure you don't miss something that puts your unique plan off course. You shouldn't be the one doing all the work to keep your retirement on pace. You should have a team in the boat with you. Your voice telling them where you're at, where you'd like to end up, and how you want to get there. And at that point, everyone falls into sync, all pulling in the same direction, toward the same purpose. Your retirement's financial security. We are Market Advisory Group, proud sponsor of Shocker Rowing.
Hi, and welcome back into Eye on Retirement. Danny, in the first segment, we were talking about fractured retirement, specifically what happens when there's a divorce involved. But I believe you're wanting to look at a different fracture that can also develop and fracture retirement plans.
Yeah, this happens more times than I'd like to care to admit. This segment we want to concentrate on when there's a fracture due to a death in the family, and that death could be one spouse or the other. Actually, it could be a death within the family that could actually fracture some of the retirement too. But let's concentrate on one spouse or the other for this segment. In some ways, it's similar to divorce, but it has its own pitfalls, and let's talk about those. You know, when someone passes away that has been your life's partner for 10, 20, 30 years plus, you know, the obvious emotion is that someone's going to be processing is grief. And we all process grief differently and for different lengths of time. But that's the obvious emotion. You just lost a life partner, someone who you've been dreaming with and you've been sharing your life's experiences with, that everything that life can bring, both the goods and the bad. Again, that's the definition of a partner. You've had common goals. Maybe during your working years, you may have said to each other, you said, you know, when we retire, we're looking forward to doing this, or we're looking forward to traveling, or you know, whatever it may be important to you. We're looking forward to getting involved in that charity that we can spend more time that we really believe in, whatever that may be for you. Then you lose that spouse, and your world's turned upside down. You know, where do we go from here? I mean, and sometimes it can be sudden. Sometimes it can be over an illness that is you might be able to see coming a little bit. But where do you go from here? How do you face life? How does the survivor face life? Whichever spouse it may be, whether it's the spouse that maybe both spouses are contributing equally to the marriage. Maybe one spouse is contributing more and the other spouse is contributing maybe more of running the household, however that may be. How does life go forward from here? You've lost that part of you, and now you're faced with not sharing your life with someone, those dreams that you were looking forward to sharing with going forward. Now you don't have that person to share those dreams with. Where there were two of you, now there's only one of you. So now you're juggling all those different emotions. As I said, you have grief, but there's a bunch of fear that goes, and there's a whole bunch of unknown that's coming. And what does the future look like? As important to that, one of those things of fear is, where's my income going to come from? And it does not matter who is the dominant income earner in the household or who's not the dominant earner in income in the household. The fact of the matter is the income picture, the tax picture, the distribution picture for retirement looks completely different when there's only one of you than when there was two.
Gerald Eidelman, Eidelman Law Firm. We finished the last segment with you. I want to take it back to you. If one of your clients' spouses were to pass, how do you approach helping them on a macro level?
Yeah, obviously, you know, we have to be very careful about how we deal with a person. The person is running in 5 different directions, thinking about funerals, thinking about how to deal with family members and so on. So we take care of that part, we are conscious of that part, and then we look to see, okay, what do you need to do to get things going again? And the first thing that comes up is, are there any estate plans in place? Do you have documents? Can we look at them? Because that's going to determine a lot of what the next step will be. And not everybody has those documents. Or sometimes there's surprise, even though they are documents. I just recently dealt with a lady. I had done their estate plan. Everything was perfectly aligned. We knew where everything was going. And they were selling a property. And they were ready to close that day. And on the day of closing, the spouse dies. The problem was that for whatever reason, that property had never been transferred into the trust that we had set up for him. And instead, it was in his name. Well, now she can't sign for the sale of the property. And now everything is up in disarray. And we need to figure out, okay, how do we conclude this transaction? What are the methods that we can get to it? And, in this case, you have to go through probate. There's no other way around it because the property remains in one spouse's name. So this is, this is also an opportunity to revisit about financial affairs. We have a group of advisors here. I have, my limited knowledge of financials, but I can turn to our financial advisors and have them look at what they bring me. A lot of times people will come in with a book full of documents, life insurances, different retirement accounts, annuities, and so forth, that to me, some of it is gibberish, but we have a full team here who can come and intervene on behalf of this person. And so that's what's so valuable about all of us working together.
Thank you, Gerald. One of the things that popped into my head while Gerald was talking was taxes. When a spouse passes, Joshua, what are some of the concerns from a tax perspective that need addressing?
It's going to be a lot of the same concerns we just talked about with the divorce situation, right? There's going to be a transition to those single deductions, single tax rates. There's a little bit of grace provided here by the IRS in that in the year your spouse passes, you do still get to filing a joint return this year. So you have a little bit more time to do some planning, some navigating. I really hate it when we have this particular conversation with clients because it's always just so sad. But at least when we talk about this issue, there's a little bit of time we can still make some changes and try to navigate these changing times for clients.
Unexpected deaths are so hard to deal with from an emotional standpoint. You don't want to be dealing with the financial fallout at the same time, and it helps to have plans in place for these circumstances. If you'd like to visit with us at Market Advisory Group and get your plans in place, please reach out for a complimentary no-obligation visit at 316-252-8707. And be sure and check out our website at ionretirement.com. We've got one more segment coming your way, and it comes right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. We'll start with a full-blown analysis of what you already have by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
I need a place to go to see about my investments. Ask my friends if they know about holistic retirement. Everything in one place. Estates, taxes, and Medicare. People meeting face to face. Advisors to help me get there.
At Market Advisory Group, retirement under one roof. At Market Advisory Group, we're invested in you.
Hi, and welcome back into this final segment of Eye on Retirement. Danny, so far in this episode, we've talked about retirement's fracturing, and we've used the illustrations of divorce and unexpected deaths. What's the final fracture you'd like to visit about in this episode?
So there is another one that can be very impactful for people, and a lot of times people miss this one, and that is the fracture of when a spouse is faced with a long-term care or a medical event, a critical illness event, if you will. Here's something that can enormously change the direction of your lifestyle going forward, depending on the depth of the medical event itself. But certainly for whether it can change the lifestyle of the person who went through the event or the person who's actually supporting that person who went through the event. So one spouse or the other, the caregiver, if you will. Resources that were once earmarked for lifestyle are now earmarked for maybe rehabilitation or earmarked for instead of for this or that. Now they have to go towards maybe adjusting something in the household or adjusting plans that I was going to spend some of my resources towards a vacation or maybe a child or a grandchild. Now those are no longer available for that because now I have to look inward towards me and my spouse towards the long-term care event. Well, somebody said one time, you'll spend more on your last 7 weeks of life in healthcare expenses than you did your entire life. So, and I want Mark to go into that a little bit better.
Mark Benefiel, a health insurance professional with Market Medicare Advisors. From a health care standpoint, what does someone do when faced with a health event like Danny described, and what should they be considering?
Well, one of the things as an insurance professional, one of my roles and responsibilities is to identify risk. So we should be discussing with our clients some of their background, maybe some of the issues they have in their background, whether cancer is prevalent. There are cancer policies that we may be able to bring forward. When you're thinking about long-term care, maybe people in your family do live a long, healthy life and they do end up needing long-term care. There are long-term care riders on the insurance policies. There's long-term care policies. So some of that's prior planning, which makes sense. But what happens if you don't have those things in place? The best advice I can give somebody is to find a healthcare professional, like I said, Market Medicare Advisors, because when you need assistance, whether it be from your supplement company or your healthcare company or whoever it might be, that's not necessarily the time to try to figure it all out yourself. And we step in a lot of cases and help people navigate. That's in our very mission statement, help people navigate these decisions so they don't have to do it on their own. A lot of people are trying to do that, and whether it's a death of a spouse or even the divorce we talked about earlier, all of a sudden you're faced with making major decisions with a system that you're not prepared to make decisions for or with, and we can definitely help with that. And I encourage all of our clients, and they're in that situation, to get together with us and allow us to help them and assist them in that manner.
Thank you, Mark. And that brings up another important aspect, estate planning. Gerald, Eidelman Law Firm, estate planning isn't just about death. It can also protect assets from being chewed up from a medical event, right?
Absolutely. This is one of the things that I emphasize to the couples I see early on and even individuals. Once you're diagnosed with a disease, you don't know the time frame you have. And there's things you can do ahead of time to protect your assets to make sure that they don't get destroyed in the process of a long-term care event. Sometimes when I have a couple that got diagnosed, the wife with dementia. Well, they didn't have a plan in place. So this was the time to go running and get it done as long as she had capacity, because that was going to make a big difference as far as what he was going to be able to do for her once she lost capacity. So all of these things come into play, and they need to be considered ahead of time when possible, because last minute is difficult to start protecting assets.
And in a lot of cases, a Medicaid trust, I know, is one of the things
That's
that you
right.
look at. And that's one way, I've heard you say it many times, of protecting those assets from that Medicare spend down, which can take you all the way down to just $2,000 in assets before Medicare will kick in. Danny, very, very good dialogue today on a fractured retirement plan. And so thank you for bringing this to the table and to our viewers.
Yes.
Is your retirement plan fractured? Are you newly divorced or had a recent death that put your plans into disarray? If you find yourself in a position where you're not sure what needs to be done with your financial future, Market Advisory Group can help. And it doesn't cost you anything to set up a visit with us just to see what could be done with a whole team at your disposal. If you'd like to set up a complimentary no-obligation visit with us, please reach out right now at 316-252-8707 and check out our website at ionretirement.com. That's all the time we have for this episode. I'm Rick Everett, along with the entire panel, reminding you we're here to keep an eye on retirement.
Unless otherwise indicated, all client and prospect names mentioned on this show have been changed to protect the identities of the individuals discussed. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns are not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to investment advisory products. Rates and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. The guest commentators featured in this show are not investment advisor representatives of Foundations and do not provide advisory services. Market Advisory Group does have several investment advisor representatives that can provide such services. This is not endorsed or affiliated with any U.S. government agency, the Social Security Administration, or associated with any federal Medicare program. We do not offer every plan available in your area. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all of your options. A Roth conversion may not be suitable for your situation. The primary goal in converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. The information provided is to help you determine whether or not a Roth IRA conversion may be appropriate for your particular circumstances. Please review your retirement savings, tax, and legacy planning strategies with your legal/tax advisor to be sure a Roth IRA conversion fits into your planning strategies. All rights reserved.